to, and two managements we are going to speak to on this edition of the Smith Show. Well, the first company, Raymond Realty company, will develop a gated community in Bandra East worth 2,000 crore was the announcement that came through from Raymond. The stock is up and away, 2.5% higher. This came in yesterday, mind you, and or rather the day before, and therefore was part of yesterday's break. And in terms of revenue, they're expecting around 3,500 to 4,000 crore of annualized revenue over the next 4 to 5 years. Mind you, this is a company on a standalone basis, post the demerger, which had revenue in FY23 of roughly 2,700 crore. Now, to try and give us the larger picture, the larger perspective, we have the CEO of Raymond Realty, Harmohan Sahni, with us. It's a pleasure having you on the Small and Mid Cap Show, sir.
Hi, Harsh. Pleasure to be here on the show.
Right, Mr. Sahni. Okay, so let me first kickstart, try and understand as to how quickly is the demerger going to happen in terms of timing. I think that's something everyone's looking out for.
So demerger now, as you know, is a foregone conclusion. Now the court-convened meetings are happening as we speak during this week. So it should be imminent, whatever time the process takes. Our current estimate is that in the next 2 to 3 months, it should be through. We are expecting listing sometime in June, July. That is what our corporate team has kind of estimated. But then process is process. It could be a few days here or there.
Okay, Mr. Sahni. Well, Mahima this side. Firstly, congratulations on the launch of the new Bandra project. Just trying to get a perspective of how this project is going to pan out to be. What are the timelines and what kind of revenues are you expecting out of this?
Hi, Mahima. Thank you for your good wishes. So this project is very close to BKC. And it's going to be the largest gated community in that area as of now, and for the longest period of time. I mean, probably it is the largest in the last 20, 30 years or so. The estimated revenue, as you rightly said, is 2,000 crores plus. The timeline of this project, we will be completing this project, the entire project. It will be done in 2 phases, but the entire project will be done in about 5 years' time. Total end-to-end. We launched it only day before yesterday evening in terms of sales. The construction has begun. This is a special project for us because this is the first time we are moving out of the Thana market and expanding our footprint into MMR, the larger MMR, and Mumbai. So Mumbai is always special because it's also our home city.
Sure. So, 2-3 months to the demerger a foregone conclusion. I want to try and understand where Raymond Limited goes from here, because I'll remove Raymond Consumer for now from our discussion. So where does Raymond Limited go from here? 2,700 odd crore of revenue in terms of both real estate and engineering in FY23. Where does the number sit in FY24 and where do you go from here?
So Raymond Limited, as you know, will comprise of real estate as well as the engineering business. And I look after the real estate business, so I can talk more about that. Of the larger entity, I mean, as far as 23 is concerned, the numbers are already known. You yourself said that. And 24, also we are seeing growth which will be there. So the year is going to be ending soon. So I would request that let's be a little patient. I don't think we have a policy of making forward-looking statements, but it will be a growth year for us. That is something I can share with you. Our pre-booking numbers are quite healthy. Up to end of Q3, the numbers are already there in the public domain. So that clearly shows that this is a growth year for us for both engineering as well as real estate business.
Yeah, but if I can, okay, so if I can have maybe a 3-year vision, and I won't push you on the engineering side of things, but a 3-year vision from the real estate business side of things, how many projects are you looking to take up? Given the capital that you have, you're going to be debt free, so that's the big positive as well. So maybe in the next 3 years, what's the kind of number that one should look for from the real estate business?
So real estate last year in terms of sales bookings, we did a healthy number. We did about close to 1,600 crores last year. Current year pre-booking will be a very healthy growth upon that. And next year also you would see growth. In terms of number of projects, we have already signed 3 projects, which is outside of Thane. Bandra being one, there is one in Mahim, and there is one in Siam that we have signed. These are all redevelopment projects that we are currently focusing on. That's where the big opportunity is in Mumbai. So the total GDV of the entire real estate, which we have currently signed up, is close to 30,000 crores today, where Thane itself is 25,000 crores. And outside projects, 5,000, hoping that we'll do slightly better than that. That's the current estimate. So that's anyway there. As far as the real estate business is concerned, we have kind of looked at almost a 25% CAGR, which is something, as of now, the numbers are holding good for the last 2 years. And I see the market being very sustainable for the next 3 to 5 years. For sure, all factors are aligned for an upswing to continue in real estate for at least for the next 5 years. So if the industry growth is going to be 16 to 17%, which is what the estimate is by market experts, we hope to do better than that, somewhere in the region of 25% CAGR.
Right, Mr. Sahni. So as you mentioned that you're looking forward to a lot of projects and a lot of joint development agreements as well. And since you've mentioned that you've become net debt free, how do you plan to fund these projects going forward?
So, of course, we are net debt free, so we have access to debt. That's one obvious avenue that we have for access to capital. But the big advantage that we have is that we have a solid platform or a launching pad as far as our Thane land is concerned. We have signed 3 more projects on the strength of that itself. The cash flows which will be generated from internal accruals from the Thane project will fulfill a very large part of the need for equity infusion, which we have to do for this. So it will be internal accruals from there. For construction, anyway, funding is available at a much cheaper rate from banks. So we would be accessing that because that will be the prudent thing to do in terms of return on equity to be the maximum. So that's generally the plan. And our focus principally is on residential projects where buyer's equity also plays a role. So the projects get launched and a part of funding also comes from buyer's equity. So these are going to be the 3 avenues which will fund our expansion, internal accruals being the largest part, and then buyer's equity, and then the last is, of course, construction funding from banks.
Right, Mr. Sahni, quickly on to profitability. Margins above 20% in the real estate business doable?
Oh, certainly. So it is going to be in the range of, as per our estimates, what we have done going forward. Obviously, as all organizations do, we have a long-range plan in place, and we are expecting margins to be in the region of 22 to 25%, depending on year to year, which project at what point in time kicks off. So it will be range bound within this 22 to 25%.
Okay, Mr. Sahni, thank you so much for speaking with us at NDTV Profit and guiding us that your margins from realty business going forward, you expect approximately 22 to 25%. Thank you so much for speaking with us once again. Before we slip to a short break,